Hey, how's it going, guys? Albert Ding, also known as Trader AD, aka the Counter Trader, and so it's been a while. I've been on and off last week, just trading off my light speed and doing my own thing, trying to collect my thoughts and figure out what to do next for content on YouTube because there's just too much. I just get flustered when I think about all the things I can cover. But the one thing a lot of people wanted to see is what not to trade, and that's been hovering over my mind for quite a bit because I figured if you know what to trade, you just avoid everything else. But that's not the case because I've had people just come to me and ask me, does this look good or does that look good? I'm like, no, it doesn't. It doesn't even fit my parameters. But in their mind, if they go into different chartings or time frames, at times it does look good. So so it got me thinking. And then my wife the other day confessed to me that, and she's a elementary teacher, and she confessed to me the other day that she watches all my videos, and I know this, but she after watching she doesn't know how I trade. I don't know how that is because I thought I was doing a really good job, but I guess not. Obviously, I'm not done with the series, and there's a lot of things I need to cover still. I mean, I went from what the strategy is like, what it's about, and how to read candles and level two, and there's just so much other stuff to cover, um, like entries and stops and exits. So it just came at me all at once, and I just froze. I don't know what to do. So I just figured um, I would just slowly collect videos on what not to trade. So that's what I've been doing last week, just collecting videos of what not to trade when I see something. And I think I collected a little bit, but I'll share those later. In this video, I just want to share with you just verbally what not to trade. So first off, how not to trade is don't be overeager because you're afraid you're going to miss out. And I mentioned this before, that FOMO effect, fear of missing out. If you're afraid of missing out, you're going to start being really greedy or slutty or loose about trading everything. Everything starts looking good. If you get in that mindset, you're not going to you're not going to trade very well because personally, I believe the way I'm trading right now, what I trade is more important than how I trade it. So that's why it's been more difficult for me to even show you videos of my trades because it may be just one or two trades. And personally, I find it boring, but I guess some of you guys may want to see it. But I find one or two trades, and sometimes I may not trade at all if I don't see anything worthwhile. So one or two trades and I'm done. And after that, I'm I'm not eager to get anything else that's red or have a possibility of being red. Like the more you're in a trade or in yeah, the more you're in a trade, the more chances of external um, issues like a power outage or just a human error. Just do it once and get it done. As long as it's the best thing you can find. I find that to be the best approach. Also, what not to trade. Daily recoveries. If you're looking at the daily chart and you see something that's been red 5 days in a row, exaggeratively, sometimes it's true though, right? Ever since COVID, you'll see something that's red for multiple days, huge red bars on the daily chart. Well, if the next day is green, the day we're trading is green and it's moving up really strong, you may find an area to counter, but be very careful because we need to find an area of resistance. And when it comes to something like that, it may be recovering a lot because it has 5 days to recover. So expect a really big green candle overall for the entire day. So we really need what I'm looking for, the parabolic ramp in charting, the ramp in volume, a lot of volume, and a resistance area, and yeah, we need a lot of everything and perfection if we're going to be trying to counter something that's a really strong move to recover from a green or a red move on the daily chart. So another one is power hour. So if you're in Eastern time, the market closes at 3. Between 2 and 3, we're having the stock market surge sometimes. We'll see the SPY, the S&P dip down for no reason or go back up. They're trying to finish that brushstroke on that candle. trying to figure out what is best suited for the market to end at. And if we have something that just starts surging on up by 2:30, having 30 minutes left, and you're trying to counter it, it may not counter because it may not reverse because it's trying to finish off that candle, that daily candle that it really wants. So don't try to fight the ideal brushstroke of that candle, because first off, you can't really read the volume well because the volume is generally higher at the very last 30 minutes. So as the volume's ramping up, it could just be due to power hour. It may not be due to anything else. So, and another thing is, by the time it reverses, it could reverse post-market, not even during market hours. So we just have to be very careful. So personally, I have a rule that I don't trade after during power hour. So I take the last hour off. In fact, I haven't traded anything after 12 p.m. So there's that. Don't trade linear grinds. So a lot of times I hear people on the chat room say something's parabolic, even though it's just say it's a possible short trade. So it's going straight up. But the thing is, it's not ramping up. It's just linear up. When you see something like that, it's really hard to find where the pivot point is. Even if you see it on the daily chart, unless it comes up and exhausts itself. I don't know which way I'm supposed to go. If it goes up and exhausts itself, then we don't know if it's just going to go there and then curl down, or if it curls down, it may just go back up. So if it exhausts itself and ramps up, then we have a greater chance of actually hitting the top and then knowing that we have something good on our hands. And also, that area where it ramps gives you that room for error for a late entry. So if that 1 minute candle is this long, then and we're looking for a 1 minute trigger, taking it after that 1 minute trigger still gives you room to still make profit, as long as we're not greedy. So we need to be careful when it comes to something like that. Also, if the stock has already dipped down and then comes up and dips again and breaks through that previous low, I'm not going to take it anymore. I would not trade that one because it's resetting at that resistance support resistance line. So it would need to go a lot further down for me to even think about trading something like that. Or inversely, if it goes up and then it counters, and you miss that first reversal or counter, and it pulls back a lot, and then it breaks through again, it may look good, and it may reverse. That will be a Bollinger Band play, a band play, one of the bands. There's so many of them. But I wouldn't trade it because the second one is never going to be as strong as the first one, most of the time. So be wary of those trades. So over time, I'll collect some samples for you guys to see, and yeah, hopefully this will help. So meanwhile, this week I've been checking out scanners. Shout out to Sunny. He shared with me Thinkorswim version of my scanner. Obviously, it's nowhere as good as Trade Ideas, but it's better than nothing, right? For all of you that are just beginning and don't want to spend money on a scanner, Thinkorswim is the best thing, right? Because you can get the platform for under $50. I have $50 on mine. I think you can go less than that. And then you have Benzinga, CNBC, the scanner, and personally, it's the Benzinga and the charting that I admire about Thinkorswim. Haven't tried trading it. Let me know in the comments below if you actually use it to trade and you like it. I've heard that there's sometimes lag, but other than that, the scanner is good. It's not live though. You have to click scan every time, and I've tried it and it's nice. But the thing is, with a remedial scanner like that, you really need to use your eyes to pick what's right and what's wrong. And I've heard people say this, like they'll take my Trade Ideas, and some people love it, but then some people are like, which one do I pick? And it really depends. I mean, it's not like you look at my charts or my scanners and just assume they're all good. They're not all good. A lot of times they break the rules that I just mentioned, and then it reduces your chances of success. So yeah, I will try to make a playlist thank you, Woo, W-E-W, for giving me the idea to make a playlist. I haven't done that yet because there's so many chapters or topics or folders I need to make. But this is definitely going to be one of them. What not to trade and what to trade. So, yeah, I'm just flustered with so many ideas. But yeah, let's just deal with that first and just take everything step by step. So here is Sunny's scanner. All right, so right here I have the scan tab. And under scan, we're going to have stock. I'm going to go to volume. And for minimum, he has 500,000. And the maximum could be nothing, but it turns into infinite. And then the next one will be stock. So add another one. And put close. Minimum of 1. And maximum of 100. And the last one is RSI. So basically this is a remedial RSI scanner, but it's better than nothing, and that's more or less what we're looking for. An RSI, relative strength index, it'll tell us when something is overdone, high or low. So he has it set for, the last one's going to be study, by the way. Here it is, under popular studies. Popular studies RSI scan is right here, and then he has it set at 14, and this one's set at 83. And then change this one up to the 1 minute. And there you go. And then you click scan, and you'll have something during the day. I'll have some stuff right now. So that is a very basic scanner. Thank you, Sunny, for solving this one. This one's nice. It works okay. There's always going to be a lot of stuff that you need to weed out yourself. Don't take scanners and assume it's going to be the crystal ball. None of them are. But this one is better than nothing, I think. And comment down below if you like me to stream more. When I stream, a lot of times I'm not into wanting to talk. So that's why I don't stream. But if you want me to stream strictly just to show you my scanner, I have no problem doing that. With YouTube, there's going to be a delay. Over time, if I'm on there for an hour, there could be like a 30-second delay, which could be a killer. So, yeah, as a bad thing. So the other option is to just me do it on the Discord app that's in the description below under my friend Jeremy Newby's chat room. In the Discord app, I can stream there. Just let me know what if you really would prefer me to show you my stream or streaming my trade ideas. From there, you can opt to sign up for trade ideas, and then they'll tell you when there's a trial. You try it out for yourself for 2 weeks and ask me for my scanner parameters. I'll give it to you. Now, I've had some people ask me for the scanner parameters thinking that it's the scanner. It's not. You need a subscription, or you need to try that 2-week trial. And if it works for you, then great. It works for me. I've been using it for over, I don't know, 7 years. So this is what I'm roughly set for. And if you notice, there's 2 new windows here. And I'm trying out a friend's scanner, which is keep forgetting the name of it, Intensity Stockwatch. And I have to say I'm kind of impressed. So after this week is over, I'll give you my review of the Intensity Stockwatch. In a lot of ways, it's similar to mine. There's definitely some pros and some cons. They all scanners have cons, but yeah, I'll give you the rundown in the near future. So take care, guys. I don't want to take up too much of your time, but I'll try to show as much as I can in the near future of what to trade and what not to trade. I think that's the biggest thing right now, because I see too many people trading stuff that is a little bit higher risk. So it reduces your chances of success, basically. So yeah, till next time. Take care. Bye.